Hello, friends of Olin. Kyle Cronin here from the financial services team. Wanted to thank you for taking time to join us today. We have a lot of ground to cover, but I want to thank you for your interest in Olin. The topic of our webinar today is how will I fund my graduate education? Understanding financial options for professional students. So obviously professional means that you're working or you're looking at a program that is a professional degree. The MBA is considered a professional degree. We also have other options here on campus as well, but it's mainly geared towards our PMBA program. So to kind of get everything going, before we get started, just want to let everybody know that the participants have been muted to reduce background noise, so you only hear my voice. I want to make sure that, can you hear us? If you're having difficulty hearing us, please use the raise your hand function or send us a message in the chat box. For the questions, there's a Q&A session. Please feel free to write your Q&A or your questions in the Q&A function, and then we'll actually address all those questions at the end of our session today. So a lot to get going. We have a lot of ground to cover here. And obviously with our agenda, you see a lot of bullet points here. We're going to talk a little bit about free money, scholarships, private loans, federal student loans. Yes, these are available for graduate students. We're going to compare the options. We're going to do something like developing your financial plan for success. What is your plan exactly? A couple other items that are useful for working individuals would be tax benefits for education. How do we work with employer tuition support? How can you use those to help lower your aggregate cost of education? And then at the end, we'll cover some events and do a little Q&A, okay? So a lot to cover here. Let's start off with outside scholarships. So outside scholarships, do they really exist? The answer is yes. But you do have to do some homework. These are not going to find you. You actually have to do some due diligence and apply for these. A few websites that I've included here, fastweb.org. Actually, my wife received a $3,000 scholarship while she was doing her Master of Accounting degree through fastweb.org. Covered our books. We were happy. We were dancing in the kitchen. It was good stuff. But there's a couple other useful websites. Studentaid.gov has a website. GoGrad.org, FinAid.org, and a couple other websites as listed there as well. With these scholarships, I can share that over the past academic year, there has been a slight uptick in the number of these awards that have been received by Washington University students. In fact, I had one student receive a $10,000 scholarship last year, which is pretty significant. So, please look into these. If you don't apply, the answer is no already. But, I would kind of apply for a few and then, don't make it your life's work, but, as a budget, as something that you do monthly, something that you monitor periodically going through. Because if they say yes, it can be $3,000, it can be up to $10,000. That has been the largest scholarship I've seen thus far. We're going to kick over here to student loans. Now, starting off, we're going to talk about private loans. Private loans are exactly what they sound. They're a private loan through a bank. And with these private loans, they're available for both domestic and international students. International students may need a cosigner. However, there are some non-cosigner loan programs out there as well. With these private student loans, they typically will have a fixed or variable interest rate. The rates you ultimately receive will be dependent on your credit score, your credit history. So they require a full credit check. The applications are submitted directly to your lender of choice. We have a historical list of lenders available on our website at olin.wustl.edu. There's an Elm Select function there that does a pretty good job of listing out these opportunities. One thing to note is that some of the private loans do offer forgiveness, disability waivers, just like the federal programs do. So when you're looking at that, if you're a professional student, if you have family members that depend on you, I'm married, I have 2 small children, that would be something that I would bear in mind when I'm applying for a loan. The other thing I want to put down is that, examples of non-cosigner loan programs, a couple of these would be Prodigy Finance, Paris Education Foundation, and we also have a full-time MBA non-cosigner loan program. Fortunately, this doesn't apply for our professional programs or our part-time programs, but at least want to tee it up that, this would be an example of a program that would not require a U.S. cosigner. It would be for international students of their own merit, just being accepted into the Olin Business School. With this, I mentioned before, private student loans, you apply directly with your lender of choice. The amount that you can borrow is based on a combination of, hey, how much is the lender willing to give you, and also the Washington University's cost of attendance for the program. So with this cost of attendance, it's your tuition, it's any fees, which for the professional MBA, there are no mandatory fees, but there might be student loan fees, or if there's lab fees or other miscellaneous items along the way. And also with a private student loan, you actually have to apply based on the semester that you're attending. Unfortunately, we can't do one private loan for your entire MBA program. I wish we could, but that would cut my workload in half, and the Department of Ed's not going to allow that. But really, when we're applying for a private student loan, if you're looking at joining us for the fall semester, I would recommend that you apply for our combination period of a fall-spring loan. That way you can fill out a loan application for that entire period, and it limits the number of credit hits that you have. Otherwise, you can apply for each individual semester of the program. You can do a fall-only application, a spring-only application. The summer semester, we're talking summer of 2018 here, will require that you always do a separate loan application for that. So unfortunately, I cannot combine a summer, fall, and spring loan together. With private student loans, the application process is pretty simple. Once again, submit the application to your lender of choice. Do not send it to me. I cannot approve this or do your credit check for you. I would contact the Olin Graduate Financial Aid Office to say, hey, I am looking at a private student loan through X bank. Can you please approve my school certification process when it comes across? Essentially, the lender, once your loan is approved, once they do the credit check, they will send the application directly to Washington University, where we sign off on it based on cost of attendance requirements. Once all the documentation is received, the lender will disperse the funds directly to Washington University based on the start of the appropriate term. So if it's a fall semester loan, loans would come in probably late August. If it's a spring 2018 loan, the loans would come in probably early to mid-January. And the summer semester would have a different period as well. We'll talk a little bit more about that a little more going forward. Sorry about that. Federal student loans. Okay, this slide is essentially a background. Now, with all the stuff that goes on in Washington, D.C. these days, I thought it might be helpful just to, as a bullet point, to say that the first federal student loan was issued in 1958. So we're looking at, right about 60 years of history there of these federal programs going on. They're not going away tomorrow. So if you're looking at education, if you're wondering, how can I finance this? How can I pay for this? The federal student loans will be around here to help support that degree program. One thing, in 2010, all federal student loans are made as direct loans. That means they are from the U.S. Department of Education. If you've taken student loans previously, prior to 2010, you might have gotten a federal student loan through your local bank, Sallie Mae, Bohila, other organizations such as that. No more. All federal student loans are direct loans from the U.S. Department of Education. So there's only one lender now. Now you may have a loan servicer, but with the loan servicers, those are assigned by the U.S. Department of Education. Therefore, it's more of a streamlined process. For federal student loans, how do I qualify? Often I'll have folks say, Kyle, I made too much money last year to qualify for federal student loans, or previously I applied and I didn't get anything. Well, it really doesn't matter for graduate students. Income does not play a role. It doesn't matter whether your last name is Cronin or if it's Buffett, Warren Buffett, Jimmy Buffett, take your pick. Income does not play a role into that. To qualify for federal student loans, you first have to be a U.S. citizen or a permanent resident. You have to have a valid Social Security number on file. There are a few exceptions to that. You do have to be registered with Selective Service if you're a male. You have to be enrolled at least half-time in a degree-seeking program. For a professional MBA, the half-time status is typically 4.5 credits per term. You have to maintain satisfactory academic progress towards your degree. It means you have to keep your grades up. You do have to sign some statements saying, I'm providing this information truthfully to the best of my ability, and that's usually on your FAFSA application and also on the federal promissory notes. And you also have to meet any additional federally approved requirements. Some of these requirements might be, for example, I've had some folks who've had a name change. Well, the married name does not match what is listed with Social Security Administration. In those instances, we have to request additional documentation to prove, hey, this is your new name, and then we approve the loan. That usually happens probably 5 or 10 times a year. It's nothing new, and we're happy to work with you through that process. Within the federal portfolio, there's 2 primary programs available. There's a federal Stafford loan available and a federal Graduate Plus loan program. The federal Stafford, let's go over the quick points for that real quick. The federal direct Stafford program provides up to $20,500 in funding each academic year of the program. So if you're in a professional MBA program that lasts 3 years, that means that you can get up to $20,500 each of those 3 years, okay? There is no requirement to demonstrate need. I mentioned the income does not play a role. Washington University determines your eligibility for this program based on your cost of attendance and the other financial support that you receive. If you have an employer that's paying all of your tuition, we cannot give you a loan for tuition. The Department of Education does not allow us to double dip like that. However, you know, there are instances to where we have folks that might have a reimbursement. It's all subject to the monies received during the term that you're attending. You are responsible for paying interest that accrues on these loans. So while no monthly payments are required while you are in school, these are unsubsidized loans, meaning the interest accrues based on the loan disbursement date. A fall disbursement, which would happen in August, will have interest accrued from that August period. A spring disbursement in January will have interest accrued from that January period. If you choose not to pay the interest will be capitalized at the end once you graduate from school, and then your loan repayment would be calculated based on that. My general rule of thumb is if you can pay the interest, please pay it before it capitalizes to your loan balance. As a business professional, we want to earn interest on the money. We don't want to pay interest on interest, okay? So any way that you can do that to help lower your cost, I would recommend that. And one thing about federal programs, they can be discharged in the event of death or disability. That's written into the master promissory notes. That's something that will not change at any point. So in the event that you're in an accident, in the event that something happens, this does not go against your estate. I've been in financial aid for a little bit over 10 years. And unfortunately, I have had to work through that process a couple of times. It's point of business when you work with, 1,000 students a year, there are things that are going to happen. So, with that, the family is protected, and I am glad that I was able to waive that requirement. Let's talk about the Federal Graduate Plus Loan Program. With this, you have to be a graduate student. And likewise, as the Federal Stafford Program, you have to be registered at least half-time in a degree-seeking program. With this program, you do have to use all the lower interest federal unsubsidized Stafford loans before you go to the Graduate Plus Loan Program. And we'll talk a little bit more about interest rates here in a minute. The Department of Education is the lender. And for this program, in addition to meeting all the requirements for the Federal Stafford Program, the Department of Education does a credit check to determine your eligibility for the Federal Graduate Plus Program. So you must not have an adverse credit history. Adverse meaning a bankruptcy or other items such as that. The maximum loan available is the school's cost of attendance minus any other financial assistance, which means if we have a Federal Stafford loan, that goes against that cost of attendance, the difference we given in the Federal Direct Plus Loan Program. When we're talking about adverse credit history, sometimes folks say, okay, well, I didn't work last year, or my income wasn't what it was the previous year. Income does not play a role in determining your eligibility for the Federal Direct Plus Program. I have full-time students in our MBA program that are joint with MBA in law who haven't had a job in 3 years get the Graduate Plus every semester. It's a very flexible program. It's designed for graduate students, and it's designed to be something to allow you to complete your graduate education without having to go necessarily to a plus loan program. With the Federal Direct Plus program, it comes with a 6-month deferment. So that means no payments are required while you're in school. However, interest does accrue during those periods based on, guess what? The loan disbursement date. If you choose not to pay the interest, it's capitalized and added to your loan balance, just like the unsubsidized Stafford program. And generally speaking, this program can cover any tuition plus living expenses not already covered by the Federal Stafford Loan Program. These loans also fall under the federal umbrella in that they're discharged in the event of disability or death. For federal student loans, application process. Sometimes I have folks say, okay, Kyle, how do I apply for a federal loan, or what's my first step? Well, the first step is always to fill out a FAFSA application. And for the current year, even if you go to the federal website, you may see the 16-17 FAFSA out there. Do not do that one. Do the 2017-18 FAFSA application. It's available online at fafsa.ed.gov. Now, it's a free application for federal student aid. So that means that you should not have to pay to submit this application. If you're filling out a FAFSA and it's asking for a fee, then you're at the wrong website, okay? It's the free application for federal student aid. Step 2, fill out a financial assistance application. So whenever you fill out your FAFSA, you select that you are a graduate student. However, and you would also select that you're looking at Washington University in St. Louis. However, there's no room on the FAFSA application that says I'm looking at the professional MBA versus the full-time versus a degree in piano or whatever it might be. So we ask every student to fill out the financial assistance application to designate that you're looking at our professional MBA program or you're looking at a different type of program. On the second page of the application, there's specific questions that I ask regarding employer sponsorship. Would you like funds for tuition, book supplies, etc.? If the answer is yes, please let me know the dollar amount. I'd rather you tell me than me try to guess, okay? And then the third step would be contact Olin Financial Services for additional instructions. The rest of the application process, just so you know, once we review and we contact you with an award notification, there's going to be some online steps you have to fill out at studentloans.gov. There's some online counseling, some promissory notes, a PLUS loan application if that's been awarded, and then the last step that I always put in the email is follow-up, is wait about 3 or 4 days and just see if there's any other additional information that we need. Is selective service wasn't verified? We may need documentation for that. The name change scenario that I mentioned before, that's something that can be added at a later point as well. So make sure that we just do our follow-up and our due diligence on that, and it should move pretty smoothly for you. Looking at the time, we're at 12:19. I think we're doing pretty good here. Student loans, comparing the options. I think this is probably a screen a lot of folks are wanting to know, okay, what is the difference between these programs? Which one should I choose? What are the benefits, the pros, the cons, etc.? So let's give some quick points here. So for the federal student loans, the interest rates are fixed. They're fixed by the average sale of Treasury securities. Currently, the unsubsidized Stafford loan has a fixed rate of 6%. The Federal Graduate Plus program has a fixed rate of 7%, okay? Now, some folks may say, wow, I had loans previously, they were much lower than that. Well, now it's based on a floating scale of Treasury securities. In addition, I will say back in 2010, 2011, the federal Stafford loan interest rate was 6.8 and the Plus loan interest rate was up to 8.5. So, so right now these rates are actually pretty good compared to what was happening a few years ago. With private student loans, as a recap, you can have variable or fixed interest rates. With the federal student loans, they do have some loan fees. Now, these loan fees are taken out of your loan disbursement. So what that means is for the federal Stafford, they charge a loan fee of 1.069%. Essentially, out of the $20,500 in Stafford loans, $20,284 around about will be used, can be applied towards tuition and fees. The rest of that fee goes to the Department of Education for processing the loans. With private student loans, the loan fees may vary. A lot of them do not charge a loan fee, so that's something to bear in mind when you're looking at the total cost of education here. For both programs, you know, for the federal Stafford loans, no payment is required while in school. For most of your private loans, they do not require payments while in school as well. However, there are some programs that are set up like a $25 a month monthly payment or interest-only payments while in school. You can sign up for those options through that private lender. In those scenarios, you are required to make monthly payments while in school. With both programs, they usually include some type of grace or deferment period. The federal Stafford programs have a 6-month grace or deferment period. The private loans actually will vary. I've seen some, like non-cosigner loans, have a 3-month grace. The vast majority are actually around 6 months. I think there are a few lenders out there that actually offer a 9-month grace period before repayment is required. With the programs, there's usually no prepayment penalty. For the private loans, it's typically the same as well, but please check with your lender. There might be some that do have a certain penalty for prepaying the loan. Look into the loan disclosures. With the federal student loans, they usually offer, I would say, the most flexible repayment options available. There's a standard 10-year repayment. You can do an extended 25-year repayment. It does not change your interest rate. They also have income-driven repayment plans, so it's based off a percentage of your adjusted gross income. With the private loans, honestly, they offer different repayment plans, but the longer the term, the riskier the loan, so the interest rate might be a little bit higher. And the different types of plans would vary by lender. I do know some lenders that offer a 7, a 10, a 15. Some even offer up to a 20-year repayment on the loan. But most of them are usually fixed over a straight loan period, so there's no varying. So you can't do a graduated payment starting lower and ending higher. It's 10 years, here's your monthly payment. It works just the same as a mortgage. With the federal programs, and this is something that's a little bit different between the federal and the privates, the federal programs offer a 0.25% interest rate reduction for auto payment. Usually on the private loans, they offer better repayment incentives. For example, one lender I know, they offer a 0.50% interest rate reduction for auto pay. In addition, they will forgive 1% of the principal loan balance upon graduation from school, which essentially would help with the interest charges they have accrued along the way. Now, these will vary by lender, so be sure to do your due diligence and look at what type of repayment options are out there. Like I said, it varies by individual. I will say the vast majority of folks do use the federal programs because you know what you're going to have, and then they look at maybe consolidating over to a private loan upon graduation from school if they don't prepay it off early. Or I do have probably 15 to 20% of folks that use private loans extensively for their graduate education. So it's up to you on what's going to work best. Let's talk about developing your plan. You'll see here where I put up a grid to where I have the 2017-18 FAFSA year. So with that, I kind of show that, hey, the FAFSA can cover the fall and the spring terms. And then for summer of 2018, you notice I have a 2018-19 FAFSA. So it means when we're looking at financial plans, we do it by the academic year at a time or the semester at the time. So right now we're focused on the fall and the spring semesters. With the private loan periods, you notice that you can do one application for both the fall and spring terms. I have the anticipated tuition listed there. Usually every student coming in will take 7 credits during the first semester and do 6.5 credits during your second term. I put an estimate for books of about $600. That seems to be a good average based on my conversations with students that graduated this past term. And then you will notice that, I awarded graduate loans in the Federal Stafford and the Graduate Plus. You can also choose to do a private loan as well. Now, when looking at the Stafford loans or looking at the total amount of loans, you'll see the total charges are $12,332 for the fall semester. However, the Stafford loans, you notice, will be $12,466. You notice that little difference there? But that delta is that loan fee, that 1.069% loan fee. Whenever we award federal loans and we're trying to meet a certain dollar amount, we will gross up for these loan fees to net the amount of assistance that you need to pay for that degree program. We include that as part of our normal process. However, if somebody was applying for a private loan that did not have a loan fee, for that fall semester, the amount that you would apply for would be $12,332 if you wanted some funds for books. So just as an example, we include those fees just to make things as seamless as possible for our students. So we've kind of did a high-level view of outside scholarships. We've done, a basic overview of student loans as well. I know it's a lot of information to think about, but I want to make sure that we switch gears here. And let's talk about how do we lower the aggregate cost of education? What are some things that you might be able to take advantage of as a professional student? And one thing I always pull out is the tax benefits for education. This is important. Now, I had to put my disclaimer here. I cannot give tax advice based on my role here at Washington University. Please see your tax professional or your financial advisor, somebody that's licensed, that does this every day for a living. But a couple of quick points of things that might prove useful. Be sure to review the IRS publication 970, which is tax benefits for education, and just kind of do an overview and see which type of tax benefits you might qualify to receive. And some recommended reading would be a 2016 Poets and Quants article, Tax Court Ruling, Big Win for MBAs. So with this scenario, especially with this article, it gives the example of someone who actually took his tuition as a direct deduction on his income taxes. So therefore, he was able to reduce his adjusted gross income by the amount of his education expenses. Now, it's a special scenario, so be sure to read through all the details on that and also check with your tax advisor. But, you know, if that can lower the amount of taxes you pay, that could lower the aggregate net cost of your education. Don't forget there's some basic credits as well, such as the lifetime learning credit. There's a student loan interest deduction, possibly for interest that's paid on student loans. This works for both private student loans and also federal student loans. With the form, once the interest is paid, you would get a form called a 1098E for that. For your tuition deduction, there's a form called a 1098T that's issued by Washington University for those components. So you would need those forms when taking those to your tax professional or whenever you're trying to claim any type of deductions as well. Another thing to think about would be if you're not participating in a Missouri Most account, 529, those 529 plans also allow you to pay for education and have a deduction on state taxes. In Missouri, we will use any 529 plan, but if you're coming from out of state, please be sure to check with the rules associated with your state of residence. Once again, your tax or your financial planner would be able to help guide you more through that process. Another thing that we get questions about pretty often would be, you know, employer tuition support. So, you know, employer tuition support, we usually break those down into two categories. Is your employer paying directly to Washington University? Are they supporting your tuition up front? If the answer is yes, we can set up a third-party billing arrangement with our Office of Student Accounting or the Student Billing Office. Essentially, to set up this third-party billing, we would need some documentation on the company letterhead. We would need your name, and you need to include your student ID number as well. They would need the beginning and ending date of your sponsorship. Hey, we're sponsoring you for 3 years. We're sponsoring you for 1.5 years, whatever it might be. The types of charges. Are they covering tuition? Are they covering tuition plus, let's say, lab fees? Do they cover any bear bucks if you buy any meals here on campus or things like that? And then, in the event that we need additional documentation, we will contact you and say, hey, these are additional documents we need to set up this third-party billing. We probably need some type of payment date. Who do we bill exactly at your employer, name and contact information, and other items such as that. The vast majority of folks actually fall under a category called tuition reimbursement. Tuition reimbursement is exactly what it sounds. You had to pay for a class and then be reimbursed based on your satisfactory completion of the course. For that purpose, most employers will accept copies of our billing statements along with a grade report from the WebStack billing account. Now, WebStack, you'll learn more about this during your student orientation. It is essentially the central system where your registration, your course listings are. It's also where all the tuition bills are, where you can see financial transactions. So basically, it's like that home page that I would recommend you save as your favorites. I also recommend that everyone check this WebStack account at least once a month. Make it part of your monthly process, that whenever you're reviewing accounts, just make sure everything's looks correct in there, make sure your courses are correct, and other items such as that. In the event that your employer requires additional information, please let us know. Sometimes they may want an itemized bill or they may want an itemized receipt. In those instances, we can do a manual process. Our registrar has a program set up on company letterhead that she supplies to her students. You have to request that. It's not something that's done automatically. In the event that, you need additional documentation midterm or something, please contact Olin Financial Services. We're happy to try and help with that process as much as possible. So I know I covered a lot. It's about 12:30, so we're 30 minutes in here. We're trying to keep this to about 12:45, about 45 minutes. Upcoming admission events. We want to remind everybody that we have an information session coming up for our professional MBA program on Wednesday, July 19th at 5:45 p.m. So we will be doing an overview of our professional MBA program, talk about the courses, talk about how does the layout work, and how this might be a fit for you. I do plan on attending that information session, so I plan on being around. So if you have questions about financial aid and would like to do this one-on-one, I plan on being there. So please feel free to ask, or please feel free to call ahead, and maybe we can schedule an appointment prior to the session as well. We also have a webinar called Advancing Your Career. It is on July 25th. It's going to be at noon. And so be sure to log into that. That's some events here at Olin. And as a quick reminder, we are accepting applications for the fall 2017 semester right now. So we're still in that process of processing admission applications and everything like that. When looking at financial aid, sometimes I have folks say, okay, what is my first step? Well, I mentioned, federal loans is a FAFSA, private loans you have to apply with the lender. Honestly, your first step would be to accept it into the program, right? I can't process a loan for a student, for someone who's not a student here at Washington University yet. So be sure to fill out those applications for admissions. The financial services team, we're happy to work with you. We're happy to coordinate the financing as needed. The most important thing is we want you here. We want to work with you. We want to help you to achieve that goal of getting your graduate education completed. So we're going to open this up to questions, and I do have a question here. It seems to be from Ian. And the question is, if you plan on speaking this later in the presentation, could you touch base on post 9/11 GI Bill and how it applies to PMBA? Any difference between the full-time MBA versus PMBA? Well, if we have any veterans that are looking at our professional MBA program, basically the post 9/11 GI Bill, it's a veterans benefit. And there, as far as tuition benefits go, there are no differences between the professional MBA and the full-time program. With any type of housing allowances or things like that, there would be a difference. So Ian, I'll tell you what I will do. I will touch base by email, or I'll touch base under a separate message regarding the post 9/11 GI Bill and how it applies to the professional MBA. Let's take a look here, see if we have any questions. One thing I do want to pull out that I do get, this question pretty often is, okay, Kyle, I have some tuition reimbursement. What happens if I set up loans, let's say for the fall and the spring term? Can I modify my loans at some point in the future? And the answer is yes. Here at Olin Financial Services, we want to work with you. And if you need to modify or adjust your loans at any period going through school, then we're happy to try and accommodate that. One thing to bear in mind is this is important that you would have the school return the money rather than you just paying off the loan directly. The reason being would be the loan origination fees. And when we're kind of going through that, if you have a reimbursement, if you have an extra $5,000 or if something comes in, just contact us saying, hey, I got some extra money I want to apply towards tuition. Give us a call. Let's schedule a one-on-one meeting. It shouldn't take 5 or 10 minutes, and let's figure out the best way to lower that overall cost of attendance for the program. My typical rule of thumb would be to always recommend folks to try and minimize the amount of Federal Graduate Plus loans taken along the way, because those loans have the highest origination fee of 4%. They also have the highest interest rate. Those are currently at 7%. So, by doing that, you're lowering the cost of education significantly. 4% right off the bat is pretty significant there. So, looking through here about any other questions, don't see any currently at the moment. We're right about at 12:36. I think in the interest of time, since I've given you a lot of information to review and chew off, I'm going to probably stop the video here, but please feel free to reach out if you have any questions along the way. Please submit those applications for admissions. Please reach out with questions about financial aid or anything about the Olin Business School. We're happy to help. Once again, I want to thank you for taking time to join us today. Take care and have a wonderful day. Cheers.